Hello? Can you guys hear me now or no? Okay, okay. I'm not sure what just happened. All right, perfect. All right. So I'm just gonna answer this first question. It was about liquidity. So liquidity is essentially sound too low. Can you right click my profile or right click my name and then you can turn up my volume to 200%, or I can turn it up in my setting. Let me see. How's this? Is this better? Or is this too loud? What is SMM? Could you explain what SMM is? I'm pretty sure I should know this, but I just want to know what the acronym is. As for liquidity, you can look at every high, every low in the market as liquidity. You can, like, honestly, if you want, you can literally study retail patterns, like all the retail patterns, and that is where you'll find your liquidity. Because as smart money traders, we're looking to take profit where these retail, well, not really, we're all retail traders, but where smart money is basically taking liquidity from these, from the masses, I guess. So for example, if you have a trend line, then let's say this up here, you have a triple high, right? So to retail, this looks like resistance. So this would be liquidity for smart money. Smart money liquidity model. I'm not 100% sure what that is. I haven't got into that part of the mentorship yet. I've just been very busy with other stuff. Yeah, I am in Casper's mentorship. Do you understand what liquidity is though? Like how we target liquidity, how we use liquidity, stuff like that. Is that like what you're asking, or is it a different thing you're asking? Yeah, exactly. I saw it in the entry models module. I just haven't gotten there. So here's like a chart I made in my notes. So this is essentially like how you spot liquidity in the market structure. It's just you use highs, lows, right? Every low and every high is liquidity because most often there will be a stop loss there. Like there will be a bunch of stop losses above highs and below lows. And that's what we target, because you have to think in the way how trading works is that trading is a zero sum game, right? So that means that in order for someone to win, someone has to lose. Right? Does that make sense? So the main types of liquidity I use, like this is pretty much all I use, is trendline liquidity, and then I have retail support and resistance. I do not use inducement. Sorry, my throat is a little dry. I think that inducement is a cool concept though. This is something my private mentor taught me, is inducement. And honestly, I don't refer to it as inducement, but really all I do is I use SMT divergence, and that's essentially inducement. To my knowledge, what inducement is like when you're creating, like, is it when you're creating equal highs, equal lows, and then traders will, it'll induce traders to get in. So it's like, for example, this manipulation, it induces traders to go long or short, for example. Let me know if that's correct, Khaled. Perfect. Yeah, so Khaled, I just look at that as SMT divergence when you're trapping early buyers or sellers. So can I take this off my chart O2D? Does this make sense to you? Or do you want me to further explain? Like when you have trend line liquidity, you aim for the high that started that trend line. And then for this trend line, for example, you aim for the low that started that trend line. Perfect. This is recorded, so if you guys want to rewatch it on YouTube later, you guys can. I'm gonna try to answer as many questions as possible. You posted a chart earlier that showed we haven't taken all-time highs on NQ, saying you're targeting the weekly fair value gap on NQ1 exclamation chart. Taking the highs since we're higher time version, we higher time frames now. Let me look on weekly chart. Are you talking about this high right here? That looks perfect, bro. Khaled, that looks like a really good trade. Yeah, I don't see anything wrong with it. It's like you're bullish, you're buying below lows. That's perfect. Exactly what you should be doing. Aramis. Did I say your name right? Aramis? Make sure your B adjust on your chart is on. So this button down here, make sure that's blue. So going back to the question, you said, shouldn't we be expecting internal range liquidity on the higher time frames now? So how I would go about this is I would use projection swings. So if we took this high, right, where did we come from? We came from internal range liquidity, right? So using that time frame alignment, I would drop down to the 4-hour. Sometimes I like to use the 6-hour. And I find like, what is our manipulation here? So what's the manipulation that started this up move? Well, it would be this specific manipulation right here. Right. Once you draw that out, you can look for your levels. And the reason why I said that the weekly fair value gap is my current draw is because our higher time frame is bullish. We just tapped into an internal range liquidity, right? And we're displacing higher. So from here, what am I looking for? From -2 to -2.5 standard deviations, I'm looking for a reason that market could potentially have a change in state delivery. So most often than not, I'll just refer to the numbers themselves. I don't really need a reference point on the left of the chart. And from here, I'll expect some sort of either consolidation or retracement, which is why today, this morning, I was talking how I see these highs are being engineered. I want to see drop lower using this dealing range right here, right on the 4-hour. And once we're in discount, we're looking for buys, right? So if we're continuing our higher time frame bias, then tomorrow I would be bullish. Actually, tomorrow is Friday, I believe. So tomorrow, let's look at the weekly. Depending on TGIF setup, let's see if this is valid. So right now, as of right now, I wouldn't say that tomorrow is valid for TGIF setup. I would expect an expansion tomorrow higher, end of week. Exactly. So I use projection to see how far past external range liquidity we are likely to go, and then understanding that, you can trade with the higher time frame bias, right? Is SMT divergence always in your checklist for entering trade? Yeah, essentially all the time, honestly. Whenever I do my executions, I'm looking for that SMT divergence, right? So the qualities of a good smart money reversal is, I'll type it out. SMT divergence, intermediate as market structure shift. Higher time frame bias. So these are like the 3 things I'm always looking for whenever I'm looking for a high probability smart money reversal. TGIF is essentially on Fridays. If you meet your weekly target by Thursday, then you will have a retracement into 20 to 30% of the weekly range. And that would be that TGIF setup. Whereas if that objective has been met for the week, then we expect Friday to continue, or it hasn't been met, then we expect Friday to expand to that. Yeah, exactly that, OTD. OTD, are you in Casper's mentorship? You are, right? If you are, if you go to resources, then all my notes are inside the resources, and you can find it there in week 3, and then it's 3.1, I believe. How much emphasis does quarterly theory have on the trades you take or affect your daily bias? So when I'm looking for quarterly theory, this week is honestly not super good for quarterly theory in my opinion. Wait, what did I just do? Oh. Right, so in terms of quarterly theory, this week, I don't think it was that clean. So if I were to use quarterly theory, I would refer back to my monthly quarters. Week 3.1, my notes for that. So if we're using the weekly quarters, as of right now, what I'm looking at is Q1 looks like accumulation. Q2 is likely to be manipulation. Once we tap into this weekly fair value gap, I would like to see possibly a distribution lower. Distribution lowered for a run higher afterwards. if that makes sense, for the rest of this month. So it's like on Q4 we could see a reversal, if that makes sense. And that's what I have in mind right now. But remember that quarterly theory is not set in stone. It's more of, it's just a framework that you use, right? I sent it to you. Okay. Continuing on SMT divergence. When one pair is diverging, how do you know which one is the right one to possibly trade? I look for the pair that has low resistance liquidity resting as a obvious target. So it's like, for example, I'll draw it out actually. So let's say we have NQ on this side. Then we have YM on this side. Right. So here you have SMT divergence. Let's just pay attention to the one on the highs. So you have SMT divergence up there, right? So how do I determine which one I want to trade? Well, how I determine is that I look what has a more obvious drawn liquidity. Well, you have these equal lows. So in this case, I would want to trade NQY because these lows over here have already been grabbed before this play higher. Makes sense? So in this case, this is the obvious target for NQ. And so I'll trade NQ because there's just clean lows here, right? I've been rewatching a lot of the core content lectures and was wondering if you use any of the interest rate trades or open interest COT report when you do your analysis. I do not, honestly. I do not use those. Like I don't like look at them specifically. No worries. All I use really is just time and price. I don't use any like fundamental analysis essentially, like at all. Like sometimes I'll take a look at bonds, but really I'm just looking at really long term. It's like bonds, we finished this monthly market maker sell model, so I'm expecting bullishness in the indices because they're correlated. They move in tandem. When London didn't manipulate Asia high, it threw me off this morning. Find myself offside early and took an L today, -1R. So once again, referring back to, I'm just gonna remove all these drawings. Right, you want to look at SMT divergence. So I was looking at the 15-minute chart this morning. So on NQ, I saw we were engineering equal highs, right? But what happened on these other markets, right? With SMT divergence on the highs. So from that alone, we can start anticipating for bearish price action. Why do I like this staying intact though? Because it's low resistance liquidity for a future run higher. So right now, everything is going to my plan as I would like it, where we have this manipulation lower, and then I'm expecting a run higher eventually into these equal highs because they're just too clean. So once again, if we look for SMT divergence in the maybe tomorrow or next week, for example, if we get, let's say we get this. Right, then we have a bullish SMT divergence. And which one do I want to target? I want to target this one because we have all this low resistance liquidity right here. That makes sense. And then for today, how did I find my targets? Is I simply used the manipulation. Right. When I'm backtesting on Forex Replay, do you backtest only during trading time? Yeah, I only backtest New York time. Because that's the, like, I just try to make it as realistic as possible, right? I want to mimic my live, I guess, my live environment as much as possible. And that would be the London, I mean, not the London, that would be the New York AM session that I mainly trade. But today I trade the PM session. Why? Because AM was just a lot of chop. So when we have a more consolidating AM session, we look for a cleaner PM session. Why did the daily fair value gap on Euro USD fail? Let's take a look. How long it takes me to get confident in trading? It took me, honestly, like, I started becoming consistent after like 6 months of like hardcore studying ICT. And then after that, I started becoming profitable once I joined Casper's mentorship. Like when I got funded is when I joined Casper's mentorship. When I was consistent, that's was like around 6 month mark in my trading journey. Which fair value gap are we looking at specifically? This one or the daily fair value gap? So one of these ones, right? I would assume. Oh, there's only one here actually. Well, this one, honestly, if you look at the macro scale, we have an inversion. So this fair value gap right here is an inversion fair value gap. Right? So if we're using time frame alignment, high card rules, right? So I'm pretty sure I annotated this in one of my weekly reviews. We're at RDRB down here, breakaway gap, invert this fair value gap, and now we're bullish, right? The only reason I was bearish short term is because DXY, originally I was expecting it to go higher because I saw this original consolidation, right? Which is also a daily fair value gap. So I wanted to see price run up into that first And when DXY goes up, what does that mean for all the other pairs? It means it goes down. RDRB. RDRB is redelivered, rebalanced. So let me draw that out for you guys. So RDRB is a 3 candle formation. So essentially what an RDRB is, so this is a bullish example, right? So we have 3 candles going higher. So what an RDRB is, it's a 3 candle formation where the wick high of this bullish candle, or it can be a bearish candle, doesn't really matter. It's just candle number 1's wick overlaps with candle number 3's wick. So when you see them overlap like this, RDRB is from the candle close to the candle wick low in this case. So this would be a bullish RDRB, or actually redelivered. There you go. And that's what that is. So whenever you have this RDRB within a market maker model, it will most often, yeah, I was going to get into that, Ahmed. That was perfect. This is also implied fair value gap. You can look at it both ways. So in a market maker buy model, this will often be respected. It will go higher. And then if there's a fair value, say there's a fair value gap down here, this will be the breakaway gap. This gap will not be touched again if we're truly bullish in this case. And then let's flip this around. If you have a bearish RDRB, right, in a market maker sell model, then this RDRB will most often be respected. And this fair value gap up here will be a breakaway gap. Same thing. It's just flipped around. Implied fair value gap is when you have 2 big wicks, 3 candle formation once again. When you have 2 big wicks, so let's say this wick was like this, that wick's like that, right? They're huge wicks next to each other. You can either annotate this RDRB, or you pick the midpoint of each wick, and that is the implied fair value gap. And that's exactly what I used this morning to frame my trade. So from the midpoint of this candle wick to the midpoint of this candle wick would be that implied fair value gap. In my opinion though, like all of these, the only thing I really use is RDRB because I find more success with it. Implied fair value gap, sometimes it is hit or miss. In my opinion, it's harder to spot. I would say. I think I need more experience with it before I can really claim anything on it. So, but this is what the implied fair value gap is. But going back to the RDRB, that's the reason if you watch my trade executions, I'm trailing my stop loss so closely, is because whenever we create that RDRB, is I'm expecting the fair value gap below it. I don't want that to be touched anymore. I don't even want it to be wicked into anymore. So I'll trail my stop loss there. And if we're truly bearish or bullish in favor of my trade, then my stop loss should never be touched. Once it's touched, I know it's time for me to get out, and usually it's a pretty good spot to get out. But yeah, that's how I trail my stop loss. When determining breakers, do you use clean structure with your high, low, higher, higher, lower, lower candle be responsible for a high? Yeah, so one candle can be responsible for both the high and the low. So then we're gonna have to think back to candlestick anatomy, right? So let me look for an example for you guys. Here we go. So this isn't a breaker, but I'll just use that example because this candle right here specifically, I'm going to use this one as an example. This one here specifically. So when this candle here makes a high and a low, right, this is still valid. But now you're going to want to think in terms of candlestick anatomy, right? So if you have a bearish candle, what really happened on a fractal time frame, right? Because what came first? In this case, it would be that high, right? So you have an open, high, low, and then close. So in this case, your high came first. So now you're looking for a high, low, and then if it went higher, higher, high, and then lower, low. This would be your bearish breaker. That makes sense? Wonder if I can find an example of that for you guys. Looks today like today's on the 15 minute. Daily volume imbalance. Is it all the way over here? Is this on NQ? Aramis? I'm a little confused. So daily volume imbalance. Are you talking about this one right here? Okay. Okay, perfect. And then 15 minute. So volume balances, I sometimes like there are specific times I'll use them, but majority of the time is I'll kind of more so disregard them. If it's for like a unicorn entry and I don't have a fair value gap, then I'll use that volume imbalance, for example. Because more often than not, you'll see that a volume bounce is like paired with the fair value gap. Let me go back to the daily. For example, it's like if we're gonna go for this volume balance, I'm pretty sure we're gonna wick into either this fair value gap, or if we create a fair value gap here, this fair value gap, right? So if we were to trade into this to fill it, most likely we'll go into it. For Cheap's question, sorry I missed this. In those 6 months in hardcore studying, did you buy a challenge to practice throughout studying, or no, just focused on studying? What I did was I used FTMO, the free challenges, and my first challenge I like passed it, so I was like, oh, bet. And from that moment on, I started like buying challenges, and then I probably blew like I think I blew like 5 to 8 accounts before like finally getting funded. And definitely it wasn't my technical analysis skills, it was definitely more mindset that caused those failures, or not failures, but like just those blown accounts. Discuss how you would frame a AM or PM silver bullet based off of external range liquidity and internal range liquidity and time frame alignment. Perfect. Okay. I think this is a perfect example right here. So right here, yeah, this was a really good example actually. And then we have our internal range liquidity. So here we have our internal range liquidity, and then we have our external range liquidity. So this is something I've been expecting. If you watch my weekly reviews, this is something I've been expecting, is that when we had this consolidation, I was expecting either this high or this low. If this internal range liquidity gets tapped first, then I'm going for external range liquidity afterwards. If this external range liquidity gets tapped first, then we're going for that internal range liquidity. And that's essentially what my analysis was. So during these 2 weeks, I was just kind of scalping, not really sure where price wanted to go. Once we tapped into it, right, I dropped down to the 4-hour. Drop down to the 4-hour, and then we're going to do our analysis here. So we know that we're in our weekly rally gap, which would be our internal range liquidity. The reason this is internal range liquidity, by the way, is it's not internal. It's like on the weekly chart, it's not internal range liquidity. But if you look left on the 4-hour chart, what is this? That's internal range liquidity. So what a fair value gap really is, it's a lower time frame order pairing, or lower time frame turtle soup is what it is. And that's why we can consider it internal range liquidity. So that's the logic behind that. So once we took this low, at this moment I was still bearish and I wanted to see bullish evidence. So from here I would use SMT divergence, right? Because what are the qualities of a good smart money reversal, right? In this case, we have a market maker buy model where you have the smart money reversal up there, right? Right, for example, this is the market maker buy model. So from here, this is where I'm looking for that smart money reversal to enter a market maker buy model, right? So what are the qualities of a good smart money reversal as listed earlier? Well, number one on my list is SMT divergence. So let's look. At this low, we had SMT divergence with YM right here. Right, so let me annotate that for you. SMT divergence right there. Okay. So this already gave me bullish conviction. And then if we use the 2022 model, you actually have an entry right here, right? So once we get this market structure shift right here, that's what sparks the idea to go long. right here. And once we had this SMT divergence, I draw my projection swings to get the weekly target, because this is time-based manipulation, right? This occurred on a Tuesday, where we expect either a Tuesday low of the week or we expect a Wednesday low of the week. So in this case, we had this SMT divergence occur on Tuesday 1st. So we can look at this, right? So then now we can find our weekly targets. So that's one weekly target. That's a second weekly target. And that's our final weekly target. Or really, you could also look at this -3 standard deviations. But if you look left to the chart, what do you see? You see liquidity pools, right? That line up with these standard deviations. I personally like to target the standard deviations, but you can use these liquidity pools, right? So let me just clear off those. Right, so you have multiple targets, and that's why on my Twitter, I tweeted out on my Twitter, these are my targets for this week. Actually, I think my first target was here. Sorry, this was my first target. And then after we engineered these highs right here, I saw this as another target. Because why did I choose this high though? Because this is an inversion gap, right? So whenever we get an inversion gap, we can expect the first internal high to be hit. In this case, it could have been this one or it could have been this one. And I had high conviction that we're going to this one because we're entering a market maker buy model. Does that make sense so far? Perfect. Okay. So moving forward on this week, let me just make it a little cleaner. Moving forward on this week, now on Wednesday, going into Wednesday, I was like, okay, we took out this high on the 15-minute. We had this massive displacement lower. Yeah, this class is recorded. I'll upload it to YouTube afterwards. So on Wednesday, entering this day, we hit that first internal high. This is my target, right? So once we hit a higher time frame target, right? A higher time frame level equals a lower time frame what? A lower time frame market maker model. So this is where I started hunting for shorts. Why? Because we had this massive displacement down, right? And we have this very clean original consolidation over here. Right here. That's what I was targeting. And I'll get to it in a bit why we didn't meet this objective. And we just rallied higher. So we have a very clean original consolidation here. We have accumulation phase 1. And then we have accumulation phase 2. From here, we get our smart money reversal from that higher time frame level, right? Right, so that's our higher time frame liquidity. So when you're looking for that silver bullet setup, what it really is the second stage of distribution in a market maker model. In this case, it's not the most perfect example because it's not between 10 and 11. But I believe there's a second time window, right? 2 to 3, where you have like a market maker, or you have a silver bullet sell right here between 2 and 3. So if you're looking at in terms of a market maker model, this is not very clean. Let me go down to like a 5-minute, see if it's better. Does everything make sense so far though? Any questions sparked so far? All right, perfect. So when we're looking for that silver bullet setup, it's that second stage of distribution, right? So here it's very compressed. I believe if you go down to the 1 minute, it's even cleaner. But here you can see we have our low risk sell right here, and then we have our first stage accumulation, and then we have our final stage of distribution over here. Honestly, I would even say that this right here is what the first stage distribution. It's pretty like expansive here though. And this is what you'll get when you have a higher time frame framing your low resistance liquidity run. You'll have a very expansive move to your target. And I'm not sure where the low risk sell is actually. I would assume it's like up here on a lower time frame within that smart money reversal. This isn't the best market maker model, but it looks pretty like it's not the picture perfect one, but it looks pretty good. And I'm using it because it's very relevant, like very recent. So from this moment on, you can look for your silver bullet sell. So from this second stage distribution, your 2 to 3 time window, right? You're looking for that final sell into either this low, this first accumulation low. That's your first target. Your final target is that original consolidation low. So from here, you can see that within the second stage of distribution, you manipulate that high and you can look for sells. So this would be your silver bullet setup. That makes sense. Does that make sense with the silver bullet? So the key is is the key to determine what stage of the using the time windows that ICT provides, it would be 2 to 3 and then 10 to 11. But personally, I just use the market maker model without the time, because I feel like with the time windows, you are limited. You know what I mean? You're limited to looking for trades only within that window. And the reason why that window of time exists is because that it's most often a distribution phase or accumulation phase. For example, right here, you'll find this is where I took a short actually. I took a short from this high, this turtle soup, and I took it lower. I think I took profits right there actually. This trade I took, it was something crazy. I don't know. It was something like this to right here. That was my trade. The market expands higher. Here, I guess there's only one low really, so this one would be interesting. This one is SMT divergence though. Another example right here, we go below these lows, market instantly pushes up, right? We go below this low right here, instantly pushes up. Go below that low right there, continues pushing higher, right? So if we're bullish, we're just looking for lows to be taken. And then if we're bearish, we're waiting for highs to be taken. And this is where you'll find those super nice trades that go in your direction like right away. And that's what I love. And this is what I look for every time. Any trade I take, I always look for this. Do I base bias on my pre-market analysis? My pre-market analysis is really just telling me this is what it really is. When I get to my desk, I do my pre-market analysis. It tells me what's going on in the market right now. It catches me up like gets me up to speed with what's going on right now, right? But when you are in the live environment, you need to be aware of what is changing because the market's always changing. Like, for example, this could have been a reversal point in the market, and I would have to be nimble, right? Or for example, this point right here, I was expecting this low, which we never got. And then I spotted, okay, we have another SMT divergence, extremely bullish now because NQ was making higher low, right? And then on YM, we're making lower low. So extremely bullish here. And that's why this low, this original consolidation never got hit because we had that SMT divergence. And so from this moment on, I was like, okay, we're bullish as hell. And this is just a clear market maker buy model. This is like textbook market maker buy model, actually. So study, that's why I put this in homework, because you guys should be studying this if you don't understand market maker models yet. And in this case, the silver bullet buy. Right? So if you're spotting your original consolidation, it would be up here. That's your final target. And then you're looking for that first stage of distribution, right? I'd say this is the first stage of distribution. Then we got a smart money reversal. Yep, I would say any inefficiency, just wait for that intermediate term time frame confirmation. Because if you're looking at this weekly fair value gap, it's in premium of premium. Do you know what I mean? But if you drop down and dissect it within the 4 hour, it's very obviously bullish because you have this SMT with YM. And you also have a very obvious market maker model, right? So where your accumulation phases, well, you have one right here. Then you have another one right here. So where would be your... So what I just taught you guys, where would your silver bullet be in this market maker model? Exactly. Second stage reaccumulation. So this right here, that's your silver bullet right there. And this is why this is ICT's favorite setup. This is ICT's favorite setup because from second stage accumulation, second stage accumulation or distribution, that's where you'll find the expansive move to that original consolidation. And that's ICT's favorite setup. Because we pretty much just straight up expanded to the target. And I know it's December right now, so it's not as clean as I would like, but I think a really great example is Bitcoin. Let me show you guys the trade that I took. Right, so down here I took a trade. we have all of this liquidity down here, right? This is, my eye has been watching this for weeks by the time I was taking this trade, okay? All this trend line liquidity. No worries. Thanks for coming by. So all of this trend line liquidity, right? Market maker buy model. Why? Because on the higher time frame, we were in internal range liquidity, right? So that's that weekly fair value gap we tapped into. We're looking at 4-hour structure now. Where do we get our market structure shift? Right here. And this is where I longed from, actually. I decided to long from here because I saw that we were supporting from this fair value gap really well. I longed here and I put my stop loss. I think it was somewhere here below that low. And then targeting that original consolidation, right? Right here, original consolidation. High. That's my trade. All right, so you can see, like, this is how I trade. Like, this, I just look at market maker models, and within that market, like, this is all ICT concepts. Any trade you take, any trade that works, it's because of a market maker model. So understanding a market maker model is 100%, in my opinion, the absolute foundation to being profitable with ICT concepts. Like, you can be profitable with ICT concepts without knowing this, but at the same time, it's like understanding this is where you find these nice expansive moves in the market. Do you know what I mean? Yeah, no worries. So I hope that is somewhat of an eye opener for you guys. Do you guys have any last questions before we hop off here? I recorded this. I'm going to post it on Discord. Yeah, I got you guys. Just want to see you guys succeed, you know? Yeah, I'll upload it as soon as it's done rendering. I'll do a little bit of video editing if I need to, and then I'll upload it right away. Use any risk controls like 2 wins, stop. I don't do, I just look for, so if I get like an infinite amount of A+ setups in a day, then I will take an infinite amount of trades. You know what I mean? So what I've been trying to kind of improve is where I exit in my trades, because right now I have high confidence. I have high confidence in my higher time frame bias and understanding where higher time frame drawn liquidity is. But my main struggle right now is I'm very happy with where my entries are right now, because I'm entering on, like, let's say the 5-second chart, targeting like high time frame targets. And that's very rewarding, right? And that's why I can afford to like trail my stop loss as close as it is, because I know that the higher time frame, if it's truly expanding in one direction, then it should not violate specific things. But yeah, I don't stop trading. I just keep trading if I see setups. If I don't see setups, I won't trade. And it's just, I would say it's mainly just experience and screen time that helps me build like quote unquote intuition of expecting when to trade, when not to trade, if that makes sense. I guess the most simplified way I can say is just, if my narrative can be both sided in the market, then I know to expect some sort of chop. If my narrative is so one sided to the point where I'm like, oh, it's obviously going there, then that's when I'll pull the trigger on as many trades as one. Because I know when we trade, let's say my bias is bullish, I know whenever we trade below lows, we're popping higher. You know what I mean? And when we're bearish, when we trade above highs, we're popping lower. And that's where I execute my trades. Yeah. Any last final questions? No worries. I guess if you guys enjoy these, I'll host more of them. All right, perfect. All right, everybody have a great night, and we'll see how the market conditions are tomorrow. And if you want, I can also do a live tape reading stream tomorrow, possibly. I'll see. All right, have a great night, everybody.